good morning, good afternoon, good evening, whenever you are watching this week's weekly Wednesday video. All right, so y'all feeling my wannabe Mickey Mouse ears? Y'all know it's the fall, and so I'll be switching up my hair. I'm looking for something that stick. Give me your feedback on, hey, I like that style versus this style. I know y'all like this. Not a fashion blog, Patrice. We came here to listen to what you had to say about business taxes because you told us last week that you would break it down and tell us all five of the taxes that we need to pay attention to. So y'all who are just meeting me and this is your first weekly video, hey, I'm Patrice Elberry, aka the Tax Cop. Y'all see it right there in the corner. In this corner, in that corner, y'all see it, right? So, welcome to another weekly Wednesday. If this is your first time here, we're glad to have you. If this is your time back and you're like, yo, I'm playing catch up, where you been? Give us some tips. Tell us what you like. Tell us what helps. Tell us what doesn't. All right, so let's go into what the IRS says about the five business taxes or just taxes in period, because all of them don't have to just do with business taxes. I'm gonna explain them to you. I'm gonna break all five down this week. And then next week we'll talk about ways that we can trigger remembrances. That's not a thing, right? Ways to trigger us remembering when these things are due, how they're due, if they apply to us, just ways that we can leverage technology, old school journals, etc. But first, let me tell you what the taxes are. All right. So I'm gonna share my screen. We're gonna get into it. Hopefully it's big enough for everybody to see. I should have did it without the logo, but I mean, y'all working with me. All right, so the five taxes that we're talking about are, this is directly from the IRS website, is income tax, estimated taxes, self-employment tax, employment taxes, and excess tax. Now, you're going to be like, self-employment tax and employment taxes, what are the differences? Well, that's what I'm here for. We can break this thing all the way down. All right, so income taxes happen for individuals and businesses. And when you know it, this is my pass-through entity week, meaning my partnerships and my S corporations. This is when they file their taxes. Now, the interesting thing about partnerships and S corporations is they are information returns, meaning that the entity itself does not pay taxes, but it does have to file a tax return. Why? Because that information is going to pass through to the shareholders, the partners, the members, and be reported on K1s so that it can be filed with their personal taxes. So at the individual level, right, partners and members, shareholders for these two entities actually pay taxes. And the same thing happens for estates, right? If you got an estate return, you got a K1, it is actually due extension time because we're doing extensions, right? The due date for partnerships and S corporations was March 15th. And now we got this time, right? So everybody pays income taxes. Everybody pays income taxes in some way, shape, or form, whether it be you as an individual or the business entity passing it through to the individuals that own the business, or the C corporation itself. All right, so hopefully that makes sense because the C corporation is looked at like it's an individual. All businesses except partnerships and S corporations, even though they say that, must file an annual income tax return. Partnerships file an information return. The form you use depends on how your business is organized. Refer to business structures, and we talked about business structures last month. Hey, it's a rhyme and a reason to everything to find out which returns you must file. Federal income tax is a pay-as-you-go system, meaning you must pay the tax as you earn or receive it. In other words, let me put it in plain English for y'all. For y'all that know me, I'd be like, look, the people be snitching on y'all. They got to do whatever. They got to tell it. And so you got to pay tax on the amount that is reported out. So if you're a business, what happens is we have the income, we subtract that out, we have expenses from expenses, and that bottom line is what we pay tax on. Okay? You got me? The bottom line is what we pay tax on. Versus what happens when we're W-2 employees is they take all the tax out up front. We pay tax on the whole. We go back and do some reconciliation in our tax return because that's all a tax return is. It's like old school reconciliation of a checkbook to make sure you paid your fair share. Hopefully that makes sense. All right, let's get back into it. The federal income tax is a pay-as-you-go system. If you do not pay your tax through withholdings, that's W-2s, or do not pay enough tax via estimated taxes, which we'll talk about momentarily, then you're going to have to pay a tax due. So y'all have heard me say this too. If you're listening to me on a regular basis, I say the 3 ways they get taxes is either you pay through withholding, so they get it throughout the year. You either pay an estimated tax payment, right? And those happen on certain days or parts of the year, right? 4 times a year. And or you stroke them people a check. When you get your return and you find out you got a balance due. That's how this works. It's a pay-as-you-go voluntary system, but they don't know ahead of time. You got to tell them the amount that you owe. Now that don't mean go out here snitching and going out here and lying because people have snitched on you already. Don't be out here playing crazy games. I don't want nobody in jail. I'm not going to jail with you. I don't charge go to jail prices. So we ain't got to worry about it, right? So I need you to do things fair and square. All right. Estimated taxes. Now, estimated taxes, generally you pay estimated taxes on income, including self-employment tax, by making regular payments of estimated taxes during the year, right? So, estimated taxes happen 4 times a year, even at the state level. They happen 4 times a year. Normally, it's April 15th, June 15th, September 15th, or 16th, depending on what day of the week it falls, and then January 15th for individuals, right? And then at the state levels, in most cases, it's by December 30th, 31st, right? So you got to pay attention to this if you're a calendar year. So most of the stuff I'm telling you is if you're a calendar year taxpayer. Now, if you're a fiscal year taxpayer, like the federal government, their fiscal year ends September 30th, then their quarterly payments would be different. Now, the government ain't paying taxes. I mean, they taking taxes, but I'm a former federal employee, so fiscal year, when it's not calendar year, September 30th always jumps out at me. All right, so keep that in mind that next week we're going to talk about, hey, how do I know when I'm supposed to pay my estimated taxes and or how much should I be paying? Okay, so we'll get into that next week. So estimated taxes happen at that time. Self-employment taxes. Self-employment tax is Social Security and Medicare tax primarily for individuals who work for themselves. Your payment of Social Security tax contributes to your coverage under the Social Security system. Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance. That's Medicare. Generally, you must pay Social Security tax on your 1040 income. So those Schedule C's, y'all gonna have to pay whatever we got a profit, we paying self-employment tax. If your net earnings from self-employment are $400 or more, if you work for a church or qualified church-controlled organization, then you got to pay some self-employment taxes, right? There are special rules and exceptions for aliens, fishing crew members, notary publics, state or local government employees, foreign government or international organization employees. There's always an exception. Like when it comes to accounting and tax, know that there's always an exception somewhere down the road. But self-employment taxes, definitely for my clients that are LLC disregarded entities, you haven't elected to be taxed as a partnership or S corporation or C corporation. If you got a profit or a positive number at the end of that Schedule C, we are paying self-employment tax on that. And that's an additional tax on top of the individual tax you got from a W-2. All right. So you may be paying individual tax and self-employment tax depending on what's going on in your situation. Now, I'm not going to get into this week on, okay, well, if I'm an S corporation, how I avoid self-employment tax, etc. Why? Because I'm getting ready to tell you, you really paying the tax in a different manner. How do I know this? Because our next type of tax is employment taxes. When you have employees or you as the owner in a company, because you're in an S corporation, you got to pay yourself a reasonable salary. Then there's certain taxes you got to pay attention to. Employment taxes. I call these payroll taxes. And they're made up of Social Security and Medicare taxes, your federal income tax withholding, or your federal unemployment tax, as well as your state unemployment tax. If you got a W-2 and you looking and you like, man, I ain't taking home all my money, but they show enough taxing the heck out of me, because we hear this a whole lot, this is what we talking about. So business owners, when y'all are getting upset out here with your boss and stuff like that, there's so many other taxes your boss got to be aware of, right? Your boss paying individual tax unless they're doing some really good tax planning. They paying, their company is paying payroll taxes. Your portion, eh, your portion is being withheld, but the company got its own portion that's got to pay in almost all of these categories. Okay, and then depending on what else they got going on their tax return, they might got some estimated taxes they got to pay if they're a C corporation or something like that. So we up here harping on things, but I told you taxes do a lot in our locations. They help make stuff work. They taxing the heck out of us, right? Trickle down theory ain't a true trickle down theory. I'm not gonna get into all that. It's debate season. It's election season. I just need y'all to be mindful because we up there and say such and such doesn't pay income tax. Yo, maybe that's true. Maybe he leveraged the tax code or she leveraged the tax code so that they don't have to pay individual income tax. But don't think they're not paying taxes, because if they have employees, if they are running businesses, if they have investments, there's stuff that's being taxed. Now, it may be deferred, right? Because they leveraging the code. But I can tell you, hardly anybody is getting away from employer taxes. Either self-employment taxes or employee payroll taxes. They're not getting away from them. And then on top of it, we got locality tax and sales and excise tax. I'm just saying. Sometimes we get stuff and we get caught up in what the media telling us and we're not educated enough. So I want y'all to pay attention. Everybody paying some sort of tax. Now, some people may not be paying a fair share, but everybody is paying tax. Okay? And then finally, we have excess tax. Excess tax, normally when I think excess tax, I think of truckers, right? Just because automatically I think of fuel, like fuel tax. But it's not for truck drivers, but I got some clients that are truck drivers and I automatically think that. Manufacture or sell certain products, operate certain kinds of businesses, use various kinds of equipment, facilities, or products, receive payment for certain services, right? So then they got their own forms they got to file. They got excess tax. There's environmental taxes that got to be paid. Fuel taxes. I'm telling you, fuel taxes is always what jumps out to me. Communications and air transportation taxes. Tax on first retail sale of heavy trucks, trailers, and tractors. Manufacturer taxes on sale or use of a variety of different articles, etc., etc., etc. All right. So we then have sales tax that get paid at the state level, which is, charged out. I mean, we just getting taxed out the wazoo. We really are getting taxed out the wazoo. And so it's not just businesses. This is why, even though the IRS has this on the business and self-employment page, I want you to be aware that everybody is paying some sort of tax. Some are paying like several different layers of tax, right? And we're not getting around it. You're right. They tax you for this. They tax you on the food you buy. You tax you on the clothes. You tax you on your gas. They tax them on the gas. They pass that on to us so we can pay the taxes. Like, it's just everybody getting taxed. But if you understand really how it all works and have a better understanding that some people are paying more than others, yes, but that it's a requirement that everybody's paying it, and that with tax planning, that is how you are proactive and you kind of leverage the tax code. If there is a way for you to leverage it so it's at your advantage, that's what's happening. Unless you know somebody who's a lobbyist and they lobbying on your behalf, because that's how wide the tax code is so large, ain't much we can do except for know the rules, leverage the rules, get in front of the rules, and not get caught up and making sure that we're looking to keep our fair share. Because I'm not even going to talk about are you paying your fair share in tax. I'm going to start talking about, are we keeping what we want to keep? And sometimes in order to keep what we're going to keep, we're going to have to make more money. We're going to have to pay more taxes. And so I just want us to think about that as we move forward. And I'll start to break that down a little bit more. But next week, it will be Patrice. He got a tax. She got a tax. Taxes over there. Taxes over there. Taxes in a box. Taxes with a fox. AKA, I be trying to be a rapper in Dr. Seuss. Keep in mind that we will talk about ways that you can stay on top of it. We will close out the month, and then we'll go from there. Thank you, and I know this was long. Next week not gonna be that long, but I wanted to break this down so y'all can absorb it. Please, 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 please give me your feedback. Let me know if this was helpful. Let me know if this was too much. If you don't have a business, or if you're thinking about a business, or you know somebody who got a business, share this email with them, please, so that they can understand what's really going on per the code, per the resource, not per me, per what the resource says. Until next week, y'all. Peace.